Markets this week started on a positive note as trade relations started improving and China provided stimulus last week. This week was important on all fronts: economic data, economic events and political events. Although economic data gave mixed signals, it was slightly tilted towards the negative, but economic and political events acted in the favor of market. Markets across the globe ended this week with a gain. Asian, European, American markets all ended on a positive note. Nikkei gained 2 to 8 points, Shanghai gained 22 points, Dow gained 37 points, FTSE gained 22 points and DAX gained 58 points. So this week was good for investors. Now let's start with the economic data. Trade data was Germany was good as its trade balance stood at 20 billion. Japan's GDP grew by mere 0.3% quarter on quarter, while industrial production from UK was positive at 0.1% as compared to expectation of 0.1% decline, and its GDP grew month on month at 0.3%. Investor sentiment of Europe was less negative. Data from China showed its inflation month on month increased by mere 0.7%, but its PPI actually showed decline, and machinery tool orders from Japan fell by 37% year on year. Industrial production of Italy and France also indicated the slowing in the economy. Later in the week, it was observed that Germany witnessed deflation and IIP of Europe was minus 0.4%, which again showed the decline. Indian CPI increased by mere 3.21% and its manufacturing output increased by 4.2%. US core CPI month on month increased by mere 0.3%, but its CPI year on year increased by 1.7%. US retail sales increased by 0.4% as compared to 0.8% last week. Michigan Consumer Sentiment Index actually improved from the last time. And India's exports declined by 6% and stood at $26 billion, but its import declined even more, and due to that the trade deficit of India has reduced. Overall, economic data displayed signs of economic slowdown. On the days where economic data went heavy, markets were down, like when China showed deflation, but other days it was positive on the expectations of stimulus and hope of improvement in the US-China trade relations. On political front, however, there was some good news this week. US-China trade relations are improving, with both countries showing concrete actions to improve the trade relations. First, China excluded some products from the tariff but included agriculture and manufacturing products. Later, Trump also reciprocated the goodwill and stated that he will delay the tariff on China by 2 weeks. And later it was reported that China will exempt agriculture products from the tariff products. It was also reported that after this, Trump considered interim deal with China, but later US officials clarified that there is no consideration of interim deal. Trump also started changing his stance on Iran. He decided to ease the rein on it and may in fact even ease the sanctions to basically create a platform for talks with Iranian President Hassan Rouhani, as reported by Bloomberg. Just in June this month, the relations between US and Iran started escalating very quickly when Iran downed the unmanned drone of US, which was followed by more sanctions on the Iran by US. Possibility of improvement in US-Iran relations began when Donald Trump fired his national security advisor John Bolton. Bolton was considered Iranian hawk and he advocated military action against Iran. So actually the moment he was sacked, the path to improvement was actually established. And in Brexit, however, it was not a good week for Boris Johnson. He lost his chance on snap elections. Bill preventing no deal Brexit was passed, and according to that bill, if there is no deal in between UK and Europe by 31st October, then deadline of Brexit will be delayed till 2020. However, Boris Johnson still seems adamant to get UK out by EU by the 31st October. All this has put a lot of pressure on pound, but after the law to delay Brexit was passed, pound actually increased. It was reported earlier that this political drama in UK is creating a lot of uncertainty and in one of the biggest financial centers of the world. In fact, volatility is so wide that anything ranging from no deal Brexit to new referendum on Brexit can occur. However, markets reacted more towards the positive news from US-China trade relations, and that led to the gain. This week, OPEC released its monthly report, and in its monthly outlook, OPEC, for demand for oil has declined in 2020 because OPEC has said that production has been very high. In the report released on Wednesday, OPEC actually stated that in 2020 demand will only increase by 1.08 million barrels, which is 60,000 barrels per day less than the previous time. Also, the growth for economic growth saw decline from 3.2% to 3.1% in OPEC's outlook. Pointing towards the rise in oil industry in US, they added that growth in supply by US will be more than growth in demand for oil. So that's why they are feeling there's more chance of oil glut. In its meeting, however, OPEC decided that it will continue the rate cuts as demand outlook is not so positive, and also urged Iraq and Nigeria to comply with the production cut. Iraq has produced 4.8 million barrels per day against their target of 4.5 million, while Nigeria also produced 1.84 million against 1.6 million barrels per day target. This decision was taken to prevent the oil glut, as we have told US started increasing the production. Before that, IEA reported in its monthly outlook that for a brief period in June this year, US actually became the top exporter in the world. IEA added that boom in shale production made US top exporter in June, when it exported more than 3 million barrels per day. Although OPEC in its monthly outlook have reduced the growth in its to 1.08 million barrels per day, but IEA has kept its forecast for 2020 at 1.3 million barrels per day. However, these forecasts are based on two very important assumptions. First, that escalations between trade war won't happen, and geopolitical tensions surrounding Iran will also ease down. While production cuts by Russia and OPEC are also one of the major reasons why US reached on the top. In fact, all these things led price to the downward direction. Even after volatility of Brexit, mixed data, markets were upbeat as they expected improvement in trade war, which they got, and they waited for the main event of the week, an ECB meeting, and which lived up to the expectations of investors. In a widely anticipated move, ECB gave the market what it was expecting, the reduction in rates by 10 basis points, which brought its deposit rates to minus 0.5%, and it also started bond buying program to buy bonds worth 20 billion euros from November. But main refinancing rate has been kept unchanged at 0%. After this move, markets reacted very positively, and this positive trend is continued. While oil markets danced on trumpet, they went down when hopes of improvement between US and Iran began, but went up when inventory data showed more than expected decline. However, they ended this week in red because there is an outlook that demand won't increase, demand is not good, so that weighed heavily on the oil traders, which resulted in decline in oil prices of both Brent and crude. Gold, however, remained this week around 1500 but closed below it at 1496. First, investors did profit booking in the bonds, which increased the bond yields, and that decreased the attractiveness of gold. Later, profit booking was also witnessed in the gold, and that kept the gold around 1500. Rupee this week was on a roll and showed quite a positive run as improvement in trade sentiments and ECB rate cuts made investors move towards the emerging market. Along with that, foreign oil prices also helped rise in rupee. This week, in fact, for some days, India also witnessed inflows of FPIs, and that also again helped the rupee. So basically, for rupee, as emerging markets get inflow during the positive sentiment, as hence resulted in the increase in the rupee, and it actually closed below $71 against dollar this week. Bureau Report, Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना ना भूलें।